Where is the national residential real estate market today? Are you curious about the state of the real estate market in March 2023? In this video, we're going to take a look at the key housing market metrics and walk through relevant narratives around the national housing market right now. Hello Central Kentucky. This is the Century 21 National Residential Real Estate Market Watch for March 2023, brought to you by Century 21 Simpson & Associates. Here's a quick summary. TLDR. The housing market is cooling in the near future. Inventory remains at record lows and forecast remains low, but it is growing. Buyers are facing less competition. Interest rates are rising, but prices are as well. Affordability is eroding for buyers, while sellers will see fewer offers per property and are less likely to sell above asking. Now, let's dive into the latest data and trends on where the national residential real estate market is today. January 2023 months supply of inventory. Months supply of inventory has fallen below 3 months again. The massive 81% rise is compared to the all-time low of 1.6 months in January 2022. This skews the year-over-year percentage change, because it's comparing against very unusual conditions. Over the past decade, the average month's supply of inventory was 3.9 months. January 2023 was 25.6% below that. As a reminder, 6 months of inventory represents a balanced market, favoring neither buyer nor seller. With 2.9 months supply of inventory, the market continues to favor sellers, albeit with a little more breathing room for buyers today than we've seen in a while. January 2023 inventory. The actual number of unsold homes on the market remains below 1 million but is up from white-hot levels of early 2022. As mentioned in previous months, it's worth highlighting that high interest rates aren't just keeping buyers on the sidelines, they're also impacting sellers' desire to list. When they have an ultra-low rate locked in, it's often a large psychological and financial hurdle to give that up for a rate that's twice as high. However, there will always be reasons that sellers need to sell, even with high interest rates. Sellers looking to downsize that have significant equity and can purchase with cash or with small mortgages are in an especially great position to act right now. They're minimally impacted by the high rates and can take advantage of the seller's market and soften prices. January 2023 existing home sales. Home sales continued the downward trend this month. However, National Association of Realtors chief economist Lawrence Yun believes home sales are bottoming out. Pending home sales are up for the second month in a row. While this doesn't always indicate higher sales the following month, it could be an early indicator that perhaps we have arrived at, or are near the bottom, of home sales declines. Looking forward, incremental improvements are expected. Yun states an annual gain in home sales will not occur until 2024. Meanwhile, home prices will be steady in most parts of the country with a minor change in the national median home price. As interest rates temper and consumers grow more accustomed to the reality of higher rates becoming the norm, expect to see sales increase. Keep in mind that we haven't yet solved the inventory shortage that led to the market being on fire in the first place. Buyers can expect to feel some competition as the market begins to warm, so long as inflation stays in control and interest rates don't spike. Yun says, what is needed is the building of single-family homes. There are not many listings of homes for sale. As mortgage rates dip in future months, buyers will return. But without supply, another revival of multiple biddings could occur. January 2023 median sales price. Home prices are still up from last year. Yet, if prices continue to fall at this pace, year-over-year declines will start showing up in next month's data release. Prices vary depending on a market's affordability, with lower-priced regions witnessing modest growth and more expensive regions experiencing declines, said National Association of Realtors chief economist Lawrence Yun. Inventory remains low, but buyers are beginning to have better negotiating power, Yun added. Homes sitting on the market for more than 60 days can be purchased for around 10% less than the original list price. Pricing homes well from the beginning is important, especially since the multiple offer frenzy of the past few years has come to an end. Current mortgage rates. After higher than expected inflation numbers, rates have risen from the lower 6% levels in February. However, they remain below the peak of 7.08% the week of November 10th. Strong growth in apartment rental rates have had an outsized impact on the Consumer Price Index, the most common measure of inflation. The National Association of Realtors cites that apartment construction activity is at a 40-year high. As more of these units are built, the balance of supply and demand should help moderate rental prices and help temper inflation. Tempered inflation will help moderate mortgage rates. Keep in mind that rates trended close to 5% in late 2018. 6% rates feel more palatable to many buyers than the 7% rates we saw in November. As the reality hits that 3% rates aren't coming back in the near to midterm, consumers are getting more comfortable taking action. Rates are the number one factor impacting the number of buyers and sellers in the market today. It's not an unrealistic expectation that we'll see more activity when rates hover at lower levels than we'll see when they spike. Buyers do have the ability to refinance when rates ease. There is an opportunity to take advantage of lower competition and prices while they are here. As a reminder, rates had never fallen below 5% before 2009. In the 2000s, the average was 6.29%. In the 1990s, it was 8.12%, and the 1980s saw an average 30-year fixed rate of 12.71%. So, while the pace of increase this year has undoubtedly felt jolting and left buyers and sellers feeling the mismatch between expectations set over the past decade, with an average rate of only 4.09%, and the current rate, it's a far cry from the all-time high. January 2023 days on market. Days on market has had the sharpest monthly change in recent recording. It's up nearly 27% month over month. In March 2020, it declined by 19.4%. Days on market is now more than double the all-time low of 14, which was in July 2022. It is important to note that historically speaking, a more balanced market would consider 33 days on market to be a healthy level, signaling a fairly quickly moving market. The average number of offers per listing was 2.5, just slightly above 2.2 the previous month, again representing a return to normal conditions. We're not minimizing the clear trend of homes taking longer to sell, but context is critical. Months' supply of inventory is below 3 months again. The market has shown signs it's returning to normal, but that balance is a delicate one right now. Headlines: Single female buyers outpace single male buyers by 2x. March is Women's History Month, where women's contributions are noted and celebrated. Let's take a look at how women have impacted the housing market. Since tracking began in the 1980s, single women have been purchasing homes at roughly twice the rate as single men. Last year there were concerns that perhaps the pandemic might stall out some of the progress that single female buyers had made in the journey to homeownership. This year's data from the National Association of Realtors profile of home buyers and sellers shows that, yes, single females as a percentage of total buyers slid slightly. However, it remains strong. For reference, unmarried couple, married couple, and other ticked up by 1% in 2022. Single females own more than men in 48 of the 50 states. And of course, because they buy property at twice the rate, they are more likely to own. Female owners outpace male owners in 48 of the 50 states, with the exceptions being North and South Dakota. Earnings gap narrowing but still present. This is the case, despite that, on average women still make 83% of what men earn. Over the past 4 years of data, the gap has been consistently taking steps towards narrowing. Real estate is a powerful vehicle for wealth creation and could be an excellent way for women who fall into this category to help bridge that gap. Until the 1970s, most women were not able to open a line of credit without a male cosigner. 50 years later, they have made up for the lost time by investing in real estate. Your actions as a buyer or seller. Buyers, great news. Interest rates have eased off the 7% high they hit in November. Buyers are starting to take advantage of the lower levels of competition. Prices have tempered, too. Homes that are on the market 60 days or more are likely to sell for 10% less than list price. Yet inventory remains tight. You have a window to act right now where interest rates, prices, and competition levels are in your favor. If you're able to take advantage of that now, we can get you into a great home without having to fight to the front of the line. If we find the right house, wouldn't it be great to make the move while all these factors are in your favor? Sellers, timing the market is nearly impossible. The best we can do is read and react to the data available, and it's sending a clear message. If you're ready to sell, it's best to act now instead of waiting on the market to move in your favor. With the continued levels of low inventory, listings that are well positioned with a great mix of price and conditions sell quickly and are the most likely to be one of the 16% that's still selling for more than list price. Have your realtor run the numbers based on the market and see if that achieves your financial goals. If it does, consider acting now. Most important factor in selecting an agent. Whatever your real estate needs, it is important to select the right real estate agency and real estate agent. 26% of sellers say that trust is the most important thing when selecting an agent. 12% say that market knowledge is one of their top decision points. For buyers, 98% say that honesty and integrity are very important, and 76% say local market knowledge is very important. About Century 21 Simpson and Associates. Buying or selling a home can be stressful and overwhelming. We work to make the process as stress-free and financially rewarding for you as possible. If you are considering buying or selling property, let us put our extensive experience and knowledge about our local real estate markets to work for you. At Century 21 Simpson and Associates, we have helped people, like you, with the buying and selling of homes in central Kentucky and adjacent areas for over 30 years. We love being part of our community and we hope to continue to serve all of the area's real estate needs for years to come. We are proud of the designation of Realtor because it signifies honesty, ethical dealings, and being fair to your customers. In fact, our agents have helped us win the coveted Century 21 Quality Service Award every year since 1993 based on client feedback. And because of our commitment to outstanding service, we've been the #1 real estate agency in Franklin County, Kentucky in closed properties and closed volume in 2019, 2020, 2021, and 2022. With offices in Frankfort and Lexington, Kentucky, our agents and staff members are professionals from diverse backgrounds and are dedicated to providing the highest quality service to our clients. Have questions? We're here to help. Call our Frankfort or Lexington offices or reach out to one of our real estate agents. To search for your new or next home or learn more about us, visit us at century21simpson.com. If you like this Market Watch, we invite you to subscribe to our YouTube channel, and if you'd like to be notified when the April 2023 Market Watch is available, be sure to click the bell icon. Please join us again next month. Thanks for watching.